after healthcare, like are you being a doctor or in the medical profession? I think financial industry, when you talk about wealth management, is a noble profession.
I started my investing career maybe 38, 39 years. I could have done at age of 25, 26 first salary. Would have achieved my financial goals much earlier.
AI is actually doing things autonomously, and at that point in time, you will have to have a full guardrail around the whole ecosystem to say what is right, what is wrong.
One of the biggest disclaimer in the mutual fund is that,
Mutual fund investments are subject to market risks.
but I think it's more of emotional risk, not a market risk.
India's investing story is changing faster than ever before. Younger and younger professionals are starting SIPs, exploring digital platforms, and asking that one pertinent question: how should I become a wiser, sharper investor? Hi, I'm your host Hardik Vaidya, and welcome to the Smart Money Show podcast, where I'm joined by two incredible individuals today on this episode who will share exactly that and much more. My first guest brings in over 3 decades of rich experience, the MD and CEO of Axis AMC, B Gop Kumar, and joining him is a dynamic business leader who thrives at the intersection of tech and finance, MD and CEO of 5paisa, Gaurav Seth. Well, these two gentlemen spend an inordinate amount of time shaping, thinking how India saves, invests, and builds wealth. Well, that and much more on this episode. And with that, gentlemen, thank you for joining me for this conversation.
Thank you, Hardik.
Thank you, Hardik and Gaurav, coming to office. Thank you.
Well, I'm very, very excited. There is so much ground to cover. But I want to start off with first asking you, Gop, that the recent trends have been such that younger investors are coming in. They want access to apps, greater transparency. How has the company's vision evolved keeping pace with this change?
I think the way I look at it is that across finance services, there is a huge amount of technology intervention has happened, from a client onboarding to the client reporting tools. It has brought a lot of transparency. So technology was a key driver for whatever happened in India for the last 20 years. In my days, it was very difficult even to invest in mutual funds. You had to go to a particular RTA or a branch, submit your forms. Today, you can do business directly. And if you look at the way the platforms have improved today, I think they have done a great job in building a great customer experience. For example, we also have our own platform. Our 5 to 6% of customer comes from these platforms. And we do work with fintechs like 5paisa, a lot of fintechs in this country, and we work very, very closely in terms of building customer experiences, and especially on the fund selection process. My view is that technology has created Bharat now, and that's why the more and more young investors are coming to the markets today.
It's very interesting because you've seen a very large spectrum of behavior change, from hitting door to door and doing all these manual checks to now everything being accessible. We've also got a broking side as well to this conversation. I want to pull that in and see, we've got a young demographic joining in terms of investing. What is 5paisa doing to keep up with the change?
So look, I think I'll just go back to the earlier question you were asking. So first of all, I think digital has become default. So that's number one. The first thing that an investor looks at, and it's actually a little bit of a myth that it's only younger investors, it's actually even older investors. They want to do digital first and everything else later, right? So digital is default, that's number one. I think the second trend which has shaped this entire space is that people are progressing very fast. Everyone's interested in financial markets, which never used to be the case like 15, 20 years back. So that is point number two. And I think the third important thing is that people are, they want to jump the hoops. So it's not that I want to I'm doing fixed income investments, investing in FDs, and then slowly I'll progress soon. Abhi to hai ki, aao mere ko FNO do. So even that is coming. So now from our perspective as 5paisa, our vision has been, we've been a digital platform through and throughout since the time we were founded. And it's very, very, very clear. We want to be the best digital investing and trading platform for our users. And I think it's a tall order, but simple hai because it is something which is work in progress. You're always striving and executing to your best and making sure that you take into account customer experience, you're taking into account whatever newer happenings in technology, and try to give the best experience to our customers.
I think I agree with Gaurav in the sense that when you really look at the way digital has shaped up in India, there's nothing called as digital business. It's the way we do business. It's digital. I think that has actually really created large marketplace today, just not only for financial products, but anything in the country today is digital. So digital, I once said, Gaurav, that there is nothing called a digital business.
Exactly.
It's part of your ecosystem.
Yes.
Interesting that you mentioned this because, and you mentioned and alluded to the fact that it's not only the younger
Yeah.
demographic that is investing, even the higher side are investing as well. So let's say talk about 30s or 40s who are wanting to build serious wealth starting off today.
Okay.
What were some new initiatives that they would be excited coming from your house?
I think first thing is that one is that change of mindset. One is that you need to think about and say that there should be a discipline. And I think discipline is across, just not investing. I think as long as you discipline, then you build a financial plan, then asset allocation. You have a fair chance to succeed in your financial planning. The most important one which I want to drive a point for anybody coming to market is discipline, because if you have to put a allocation, whether it is FDs or if it is fixed income or even equity side, all will go through the cycles. As long as you're disciplined, you will generally make large amount of wealth. And interesting is that one day I told in one of the forums is that I'm very excited in life because my job is to manage money for people and I fulfill the financial dreams of people. I don't think we both will get an opportunity in a lifetime to do that. Right?
Yes.
And this is the most,
Yeah.
I said, God sent job for both of us to do this, right?
Yeah.
And I don't think anybody gets this role to do.
Yeah.
I think anybody in the finance services, especially on the investing side, has an opportunity to fulfill the financial dreams of people. So most important fundamentally is that not about whether you want to pick stocks or buying a mutual fund, which mutual fund. I think you need to reconcile that I am here with a full discipline to invest for a long period of time, and I have a financial plan, I have an asset allocation in place, I have a great platform to work. I think this is a decision you have to take. I think most people, in my understanding, for younger crowd, when I look at some data points, the discipline is the issue. They generally see their money, when generally you'll see some profits, they take and spend that money. I think I still regret my personal life is that I should have invested a long period of time. I started my investing career maybe 38, 39 years. I would have done at age of 25, 26 first salary. I think I would have been, would have achieved my financial goals much earlier.
So your first capital of investment went at 30 or 39?
38 because we all run through a liability, right? We
Sure.
didn't come from a great family background, so we had our own liabilities to fix it. India has a very peculiar thing. You take home loan at a very younger age because there is a societal compulsions, right? I've always said that buying house is an emotional reason because you want to believe the world to succeed. You will go and tell the world that I bought a house. In India, success. So India,
Yes,
typically you find people take home loans at the age of 28 to 30. So unlike Western countries where they save and they buy houses in the later period of time, India actually gets loan pretty early in life. But India has only 20-year loan period. Their
Correct.
mortgage rates are
Unlike-
30, 35
yeah.
years or 40 years
Unlike the 30
mortgage.
years.
So you pay lesser EMI, you still have chances to save money.
True.
So EMIs eats you early days of a career.
So yeah, I would just, corroborate which Gop just mentioned. I think after, interestingly, and I want to say this, after healthcare, like are you being a doctor or in the medical profession, with the patients and giving them better health outcomes, I think financial industry, when you talk about wealth management, is a noble profession. If you're really interested in helping your clients. So I think, so that's very important because it gives you an opportunity to really give positive financial outcomes for people. So it's very gratifying. You also make money, but they also make money.
Yeah.
So that is great. That's one. The second aspect is that I completely agree with Gop that you have to take a financial planning view of your, what your goals are, what your situation in life is. So you have to look at life insurance. You have to look at what kind of wealth I want to bring, rather than taking a product-centric view, right? Most of us take a product-centric view. Okay, I'm going to do X, I'm going to do Y, etc. But today there is a lot of opportunity in the market. I mean, the mutual fund industry probably is the best suited in terms of SIPs for long-term wealth creation. So you have to take an asset allocation view and be financially disciplined over a long period of time, right? I mean, the geopolitical scenario, tariffs, and all of those things. Every year you look at something. Today there's something. 3 years out there could be a war. 5 years out there could be something else, etc. But you have to take a long-term view in order to do that. Yeah.
Any specific initiatives that you are wanting to highlight that the viewers could find this useful?
So see, from our perspective, since we are a platform, what we try to do is give the best, I would say, the best tools to our customers and to our users who are not our customers yet, so that they can make the decisions themselves, right? So we want to empower them because it's digital first. So there is an added challenge of that you're not hand holding them, so you have to do everything digitally. So the secret sauce becomes empowering them with information at their fingertips, good information, and giving them all that they need to make those decisions themselves, and then giving them the most efficient and transparent platform to be able to put that thing into motion, right? A lot of times we think in our mind. So you could read a newspaper, you could talk to someone and say, oh, these are the things I have to do. You know it, but execution is missing. I think a digital platform, a good digital platform brings that together, where you can do the analysis, you can figure out what you need to do, and then you can execute like within minutes. So that's the power.
Interesting. Let's change gears and talk about, let's say there is someone who's a 35-year-old,
Okay.
and they have a 12 to 18 month horizon, and they want to understand where is the wealth being created, what sectors or themes should they be potentially picking on, keeping that in mind.
12 to 18 months, please don't come to the markets. Put your money in FDs. That's the answer.
Okay.
Gaurav, you have any answer for this?
So yeah, so I will not give any specific
There is no advice for from a
particular-
12 to 18 months
Right.
perspective.
It is obviously there's geopolitical uncertainty, there are tariffs and so on and so forth. But I would not say 12 to 18 months, but a long term. I'm personally bullish on financial services and tech, and financial services because this is still a sunrise sector for the Indian economy over the long term, and tech because with all the transformation which is happening in AI, there will be short term pain. That short term pain could be 6 months, 10 months, could be 2 years, but that's going to fundamentally transform a lot of industries. And the companies which are at the forefront in tech trying to harness that AI productivity will start to show, obviously in terms of stock prices. But 12 to 18 months, I don't have any specific.
You can remain in FDs or some fixed income product.
Gaurav, you mentioned a little while back about macro factors. I want to talk about US and other countries making big moves on tariffs and policies and rates. How does an Indian investor think about global macro factors? What should they be thinking or should not be thinking about this?
No, so certainly whenever you are an investor, whether you're in India or in global, any market, you have to take into account macro factors, right? So currently with the geopolitical situations happening, wars across the world, there is some tariff issues with respect to India, but it shall also pass, right? So as I said, I think I mentioned earlier that today there is something, 3 years after there will be something else. So while you need to consider your situation and look at the macro factors, that is not the view you should take for investing, because at any given point in time there will be some factors or the other. So my recommendation would be that take a long-term view and whatever your financial goals are, invest accordingly. And also if you have to keep certain money in fixed income because you're risk averse or you need the money or you need liquidity, you should do that, and then manage your equity exposure accordingly.
What about you? What do you think should an Indian investor think of?
See, markets, first of all, think about that markets are not linear in the sense that it's not that every day market moves up. I think markets actually discounts a lot of news. Okay, the fundamental fact of the markets are all about earnings. Okay, if you ask me, are you concerned about global? Yes, you can't say that India is completely away from the global issues, so India is separate. India is a part of the globe, so you will still get news across the world which you don't control. And there is a India macro, right? The India macro is very critical to look at also when you look at from a market investing perspective. That is it the right time? There is no right time and wrong time in terms of investing. Let me make it very, very clear. But if you want to look at and say that when I said markets are not linear, in the sense that there are issues in the micro markets, Indian macros, like our biggest worry in India is two things. One is consumption, second in terms of corporate earnings. Consumption, we should wait and watch what's happened on GST and all these things that will come and play. Another is that we need to look at the typical what is the corporate earnings. Corporate earnings has been weak for last 6-7 quarters. So typically if you look at and say what should I make money out of the markets, typically equity markets, and what should you look at? We typically look at and say corporate earnings plus 3-4% earnings, the premium on the market. So typically if you say corporate earnings are 6%, you add 3%, you get 9%. So if historically when you look at this concept, you have seen that markets actually come back. Even though if you saw the euphoric market last year, pre-October, you had 40%, 45% return, and people are pretty excited, right? And markets corrected, they will come back to the same number, which is corporate earnings plus premium. a 3-4% premium, and that's how the numbers are. So from a pure market perspective, when the markets are highly valued and when the corporate earnings are lower, markets generally will go sideways. So the critical point to look at from India challenge perspective is your consumption as well as corporate earnings. If these two do well, you will look better. But having said that, we can only make a commentary about global issues because nobody has a control on that. There is enough wars happening, enough tariffs happening. My view is that tariff issue will get settled down some point of time. I don't think anybody has a control on wars, and these are typically how the markets will discount all these news in the market. So only one thing which I tell the investor is that don't think that markets are here only to move upwards. Markets will remain volatile. It's not a linear.
So I love one of the lines that you've mentioned a little while back. Maybe I can't recollect. Was it a video or a conversation that you had which said that the market disclaimer says that mutual fund investments are subject to market risk, but you have a very interesting take that mutual fund investments are subject to emotional risk.
Yeah.
Let's talk about that.
So I always said that one of the biggest disclaimer in a mutual fund is that markets are subject to market risk, but I think it's more of emotional risk, not a market risk, because emotions is where you tend to decide whether to buy or sell a stock or buy a mutual fund or sell it. As long as you are emotionally stable and disciplined, again I'm coming back to the concept of discipline, I think you will do well. Emotions actually tend to decide and say that I made enough money, let me exit, or I didn't make money, I exit. I think there are only two factors where you decide what happens to your emotional quotient, right? So I think my idea is that I always said that mutual funds are not subject to market risk, it's subject to emotional risk.
Very interesting viewpoints. I want to circle back to what I had asked you earlier, the 12 to 18 month horizon, driven a lot by emotions, a lot of irrationalities. Let's expand the time horizon a little and talk about a 5-year period.
Yeah.
For the next 5 years, if you were to bet your money, what sector or theme would you look at and why?
See, typically, if you, from a mutual fund perspective, I will always say that look at flexi-cap and multi-cap as a product, okay? Because I'm leaving that flexibility to the fund managers to decide and get a flexibility between the market caps and the categories of what you want to invest. So if you're looking at a longer term, so you don't want to fix yourself into a small cap or a mid cap, or you don't want to take yourself a call, then you need to look at flexibility, the flexi caps or a small cap. But if you are a good stock picker, I always said that because I came from that background, you need not have to put money on mutual funds. If you are learned, you understand markets, you understand stocks, go ahead, buy some stocks, build your portfolio. But I have no answer to say the next 5 years which sectors will do well. But fundamentally in India, consumption stocks should do well. Because India is a large population, typical consumption stocks will do well, the stocks which are closer to the economy will do well. India had an infrastructure leg, India has a consumption leg. If all these things to come together, these two sectors should do very well.
Interesting.
Yeah, so I am not a camp saying that if you have money, only invest through a mutual fund route. If you are a well-versed guy and understands markets pretty well, ability to research, please go and buy stocks. That's not an issue at all.
I love that take because I think it gives a very rational perspective on how someone approaches investing. You've had a tech background. Are you inclined towards tech as a theme going forward? I'm being biased here, but maybe if you have more perspectives to give, please share.
No, certainly. I mean, but you have to take it with a pinch of salt because, given a tech background, I'm a little bit biased towards. And if you see global performance as well, not just India performance of pure tech stocks, is phenomenally well. You think about, let's say, just take a global example, Nvidia. If we had done it like, would have 100x or whatever that multiple was. But having said that, obviously the market is a little bit of a high on tech stocks, but there is tremendous potential because we are just scratching the surface with AI. So while the entire spectrum of industries will reap the benefits of it, so AI is not just limited to tech. The biggest benefit will also come in other industries, for example, manufacturing or capex related or financial services and so on and so forth. But the ones which are closest to it, which are manufacturing this, not manufacturing this, but actually creating this whole AI layer and are closely linked with it, will benefit the most, right? So obviously, I'm bullish on tech. From an India perspective, I agree with Gop. Like I think India, even in spite of all the geopolitical uncertainty and tariff situation, which is temporary, is in a good spot because there is going to be capex-led cycle. As financial services link closely to the economy. So if you have the potential, if you have the wherewithal to pick those stocks, please go ahead with it. Otherwise, I believe in mutual funds, so it's probably the best way to invest your money.
So on the note, when someone is looking to invest and start off their journey, as a young investor group, I think there is often a lot of confusion because which AMC should they go with, inundated with so many options. What makes Axis AMC stand out from the perspective of strategy, risk management, and other variables?
See, what you need to look at is that first you need to think about saying that where do you want to invest, okay, and more important is to look at the track record of the particular AMC. So we are a 15-year-old AMC. We are the top 10 AMC. We manage 3,65,000 crores of assets. We have a very strong track record. So what is important to look at also is that in the AMC bouquet, what are the products available? Today we have a product for 100 rupees SIP. We have a 10 rupees daily SIP. Wow. And we have a large amount of, so people can choose what product they want to buy from us. So it's not difficult. It's basically if you go to any platform, they will recommend based on 3-year track record. Some people will have 2-year track record, and basically based on the way the fund managers have performed. So it's not a difficult thing to decide now. Maybe 10 years back to decide a mutual fund was very difficult. Today platforms like you give a very comprehensive view. So you need to decide about platforms, what framework they use, and once that is decided, then it is not a difficult thing to do. It's basically, when I said simple is to start off with a simple flexi-cap product or a balanced vintage fund.
Not hybrid.
BAF is a hybrid product, okay. So it's very easy to start off. It is not simple. It's very simple in the sense that you can start with a 10 rupees daily SIP or 100 rupees SIP. So you start your journey there, then you decide how comfortable you are based on your whatever money you have to allocate. I think then you can build a portfolio. So idea here is that you need to build a very distinctive portfolios based on your financial planning and your asset allocation. So products, we have very broad, large area of products to decide, from a typically multi-asset, very gold, silver. We have all products to decide. So we are manufacturers. Ultimately, the platforms like 5paisa has to decide what they can offer to the investors. And they curate a lot of products, baskets and all these things, which makes life easier for a customer to decide.
Yeah. So yeah. I mean, adding on to that, I think what we do well as 5paisa as a digital platform is to be able to give the opportunity and the access to customers. Right. You pick from any fund house for that matter, in any amount of funds that the fund house offers. Right. I think where we want to help customers or investors is give them the access, give them the information, give them the analysis. There are ratings available on the platform, right? So it is not very difficult. So if you are an absolute newbie and आपको question है कि अब क्या करना है, my first 100 rupees or my first 1,000 rupees, how do I go about it? There is large cap, there is flexi cap, there is there are index funds, very simple. And that is something that you can just go on a platform like 5paisa and start to invest. Right? I think the biggest friction today is not the unavailability or the plethora of products. I think the biggest friction is that execution is that first step, as Gop mentioned, your emotional risk. Should I do, when should I start? Should I start or not start? Should I continue this journey? And as long as we keep on, from a technology perspective, make it more and more easier and informative for clients to be able to reduce that friction, and as long as customers are able to keep that financial discipline or the emotional discipline, I think that's really the secret sauce.
I think a lot of work has happened in terms of making the life easier for investor. It is just not an onboarding a customer and selection of fund, and also on the reporting side. The most of the clients wants to look at and say, what is my consolidated portfolio looks like, what is my return in terms of different products, what I bought. I think these platforms have really worked and got it right. I think I have seen that large change. Earlier days, we used to have platforms used to work only on onboarding, making life easier.
Yeah.
And then came a situation where I would get the execution right, I make it very simpler. With our days, we used to buy a mutual fund in 5 clicks. And now it has become 1 click. And the last part is getting your portfolio reporting right. I think these are the changes which has really changed the way the ecosystem of platforms are changing now. I think my belief is that we will see some more work around AI. But today, platforms have some AIs in terms of selection of mutual funds, but it will get much more better the way we train AIs. Different tools of AIs we're going to use. It will help. Our own website, we are trying to build something which is very, very unique in terms of selection. I think good is yet to come. In my view, is that technology will get evolved as much as customer expectation changes. I think very, very interesting space to watch on.
You know, it's very interesting that this conversation has elements of AI from the get-go. I think we cannot overlook the fact of AI and the impact it has on finance. I will come to that in just a bit, but talking about ETFs and smart beta products and passive funds, how is Axis AMC looking at this differently for an investor who wants growth and safety both?
So simple. See, there are a couple of products. We started 5-6 years back. I think we are late entrants in the space of passives, but we made a couple of launches very recently. Last year we had 5-6 NFOs. This year we just did one NFO here, which are very, very focused on index and ETFs. In India, the substantial portion of your passives are part of the EPFO mandate, which is provident fund mandate. But having said that, there are complicated products, there are easy products. So from a retail investor perspective, I always say that look at a very simple product, which is typically like a Nifty 100. We run the largest fund in this country. We run 2,000 crores of assets there. My belief in terms of the way investors should look like is that if an investor is looking for more returns in terms of benchmark returns and active fund management, he wants much more in terms of the returns compared to the benchmark, then he should look at active funds. But if you're looking at consistency of returns and want to look at cheaper option, what fees you're going to pay to asset management company, then you should look at the passives. Having said that, the way it is getting evolved in India between active versus passives is the biggest debate which is happening in this country. My belief is that at the moment of time, most fund managers are able to beat index, the benchmark, whatever is given, post the fee. So where does passives come to play is that it can be a part of a customer's portfolio, it can be a satellite allocation, may not be a main allocation. There are evolved investors using some couple of factor models to hedge their portfolios, which is a momentum, multi-factor ones like momentum or a low walls, people are using it. But my view is that if you are a first time investor, simply go for a Nifty 100 or Nifty 500 or a Nifty 50. Don't complicate yourself.
Keep it simple.
Most of the forums when I come and speak about passives, I always tell them, if you're retail investors, just look at simple products. Simple products makes money. Because complicated products will also make money, but it has its own minuses and pluses. So passives, in my view, is that it can be a satellite allocation for a customer's portfolio at the moment of time, the way I look at.
So I have this one question that I ask in every episode. And this question is that what is a big bold prediction for India's mutual fund space in 2030?
So industry is growing at 18-20%. So industry will grow. Unfortunately, we have 2 or 3 challenges. If you look at unique PANs in this country, is only 5 crore 30 lakhs. So that number has to change. That means we are what, 3.5% or 3.2% of the overall market. In my view is that number has to change substantially. As once that changes substantially, the AUMs will look much, much better. If you look at most of the average developed countries, the mutual fund participation is almost 20-22% of the population. We are hardly at 3.5%. So it's a long way to go. Industry really got evolved in post 2019. I think that where the wave of investing in mutual funds have changed. So my view is that the industry will stay. Industry will become very, very large. You will still find a lot of products coming in the space here. The new product which is coming is SIF as a product which is coming in. It's a high risk product what we are trying to launch, which across industry. But one thing I can give confidence to the investors is that there is a huge amount of regulation in the sense that it's a public money business. We are highly regulated. So to some extent innovation is restricted to that extent because we take approvals every time when we launch a product, and there is a large guardrails and frameworks of regulator in place. I think that is also giving confidence to the retail investors that nobody will take the money and run away. So a lot of work has done by regulator to make this business being very, very transparent.
You've given a wonderful segue for me because my next question was around regulation. And this is at you because, in particular, algo trading and compliance has been made moves by SEBI. And how has that changed the experience for an investor coming on your platform?
So see, I mean, algo was already in existence. I think this is an inflection point right now, given obviously we have talked about all the advances in technology, where algo is going to go mainstream. While the institutional players were anyway very big in this, and retail players were kind of on the side. So what was really happening is that brokers like us were exposing their APIs to either people who were providing these algos or retail investors who were very sophisticated, who could write their own algos. You have to understand that it was not a cup of tea of every person who buys, let's say, an ETF or to write algos themselves and run it. But there were a lot of people who were doing this via brokers like us. I think what SEBI has done, what the regulator is doing, is trying to bring this under control and make it more transparent, make it extremely safe, and away from market manipulation and things like that. So it's actually a landmark regulation which has come in around whole the algo guidelines, which is going live on 1st October. There might be some extensions, etc. But what this is doing is actually it is I would say giving a lot of transparency and safety to this entire algo ecosystem, and there will be self-selection, which means that if I am a credible player, only then, whether I'm a broker or whether I'm an algo creator or whether I'm a research analyst providing algos, any participant in the ecosystem, only if I'm credible and I'm going to play by the rules, will I be able to do business, right? And which is a great thing. So it might be in the short term, brokers like us will go through the investments, which we already are doing, right? I think we're almost ready with whatever needs to be done on the algo side from a regulation perspective and a tech and ops perspective. And over a period of time, I think this adds a lot of weight to the market, where you as a retail investor who has nothing to do with algos but wants to play it safe, you can pick an algo created by an X company and run it on a broker like 5paisa and see the results and so on and so forth, and you really don't have to worry about your money going away, etc., etc. So I think this is really the inflection point of a retail revolution in algo over the next few years. It's just started. We're very, very early stages.
Interesting perspective.
But I think the way I look at it is that I spent a long period of time in my career running platforms like broking platforms. I think one of the fundamental thing what we need to think about is that what is SEBI doing today? The SEBI's fundamental reason for existence is that they want to run capital markets in an orderly manner. The word orderly is very important.
Yes.
So that's how the regulations are changing, and regulations are not changing for businesses like us. The regulations are changing from a customer perspective.
I want to make it very clear to the viewers, Gop is not helping me in the conversation, but the next question was again a segue, so I want to go into that bit. The next question was regarding this. The idea that SEBI is always on the lookout for making the infrastructure of the markets more robust. But does regulation help the investors? Does it build more trust, or does it help slow down on the innovation product development side for the broking firm?
No, I think with broking, I could answer that for broking. There is always a little bit of short-term pain, because it's like, you're doing something and the regulator comes and asks you to do five more things, and human nature, obviously your father will come and say, do this, do that, right? You won't like it. So in the short term, it's always there's a little bit of friction. People go around, and the regulator is very good that there is, earlier today there was, we were representing with SEBI on algo as an example, right? So short term, yes, people don't want to do it, but over long term, I don't think it's stifling. It actually promotes innovation because it adds safety to it. Because the last thing that happens, right? Because if you have this wild west in the name of innovation, it's actually not innovation. It's kind of other, fishy stuff that happens. And over time, people lose trust and they withdraw from the market, right? You want people to come into the market. You want credible people to come in the market. You want to build trust. So even though you have to make some investments and do things the hard way over a short period of time, over the long period of time, I think these regulations are going to help. As Gop mentioned, a very, very important distinction is not for businesses, but for retail investors. And that's a critical distinction.
Yeah, interestingly is that I have seen that when the new regulation comes in, I think you'll see a slump. But after some point of time, I think there is a large market expansion happening, because there is a huge amount of customer confidence coming on the platforms. I think that's changing. That's what is changing very fast now. So if you look at whatever has happened in terms of even the mutual funds were to look at huge changes, because for example every scheme had a different name. For example, today all the names are standardized across AMCs, otherwise you will find difficult to choose. So there is a fair amount of commoditization of products have happened. So that is what is changing. That's what the regulation will change. And that's where the market expansion will happen. For example, somebody wants to buy a large cap, he knows to buy a large cap. Otherwise, there are multiple names for a large cap scheme, so customers used to get confused. Today it's become so simpler because he says that, okay, large cap is a large cap. You can't use a word called blue chip.
Yes.
So we used to run a couple of, we have a large and mid cap scheme, we used to call it the growth opportunities. Now everything is changed, and you say large and mid. Most of the name now reflects the strategy of a particular scheme. So it's become easier for an investor to select what product he wants to buy. So regulation is good. I'm from that camp.
While this concurrent thought has been regarding the AI and the impact it has on finance, I'm curious to understand AI and analytics has been very, very pivotally shaping how we approach decision making as well. But for the consumer, for the retail investor, how does this impact your decision making, and how is it affecting the lending and the investing side?
So I can comment about what we do and what we think about an AI as what is it impacting our businesses. Typically we are in investing business. What is our objective? Fundamental objective is to deliver better, superior returns to the investor. Underlying word called superior returns. I think that's a fundamental reason why I exist. That's why I collect money from the customers using my money, and my objective is to. So when you look at from that objective perspective and say that how do I deliver superior return? Can AI help me to deliver superior returns? So we've been working on this. I think very interesting is that our investment team works on AI. We also have our global joint venture partner called Shoulders. They own 24% of this company. They also work on called Little Genie in terms of their on the AI tool. So we are also looking at how can I Indianize it. Having said this, that what AI can do, we also build a human layer on this. It is just not a machine decides to what to buy, what not to buy, what to select, what sector to select. I think what is also critical is also to build a good human layer. Is that what is the capability of investment team built above AI? Because you just can't use AI as a decision making tool. We also use AI to simplify our life, in the sense that quarterly results becomes much more easier instead of writing numerous reports, but we also are working in terms of how accurate this. For example, we are trying to change from a voice recording. For example, you are getting into a quarterly call with the management, for example, and you got a transcripts, and how this transcripts can simplify and give a simple one-pager to my research team, hence research you can decode and give to my fund managers. I think that's a process. But ultimately it's about how do you train AI. The third important thing about you spoke about is analytics, that how does this analytics helps to you to think about business. We've been working, we have a separate data science team. We do a lot of customer insights around it and say that what is customer seeking today. And that's why we get a trend to think about what type of risk the investors are looking at it, and how do we work around that. And I still remember there's a flow of money coming to small caps. Last year, same time, I think everybody believed that small cap is only one space you can make money. I think so. There's a huge amount of money came in. So what I'm trying to say is that we also get early signals in the sense that what is that distributors are recommending and what platforms are recommending. We get an idea about it. So AI and analytics are part of our DNA. In my view is that AI is a conversation everywhere, and most people have not communicated what happens inside the organization in terms of how do we use AI. So we use AI as an investment team, we use it in product, but it's a long way to go. I think my view is that we have just taken a baby steps, but certainly we work on AI in terms of our investment team to decide, but there is a human layer around it.
No, thank you for sharing that perspective, because it really does add a lot of color regarding the quality of decision making that you do apply. Is the human layer more on the judgment side? Is it more intuition driven? Is it more analytics driven? Is it more resource driven? Where do you see the human layer adding more value?
Human layer See, if you get an outcome of an AI and say that, okay, this is a sector to pay, I think what is important also to look at human layer from a perspective of analytics and understand is that outcome is right or wrong, because very critical. So, for example, when you build AI based on factor models typically able to identify 100 to 200 to 2000 factors across, including the sentiments based on what management has spoken, right? And it throws out to some data point. The factor models are very prevalent in some AI factor models. So it also need to build a layer around that, and to say that ultimately the humans have to take a judgment in terms of whether that whole factor models are giving a right thing. So we've been working, in my earlier avatar we worked on a factor models. It is, let me give a simple example, I'm not complicating because these are, your viewers should understand what is it. It is like tuning a engine. Some point of time when you tune an engine, it will give a better mileage. Some point of time the mileage goes down. So what is the idea is to figure out and say that what is the right tuning of the engine.
Interesting.
So that's tuning have to change on a frequent basis. So you need to get a right tuning. Once you get a right tuning, the outcome of these AI tools are very beneficial for a world of investing or anything what you usages are crazy.
Multiple.
Yeah. So we need to think about how to tune the engine. AI
Interesting.
is all about tuning a
the
right engine.
Love that analogy. You have extensive tech background. How do you see this with your firm?
Oh, I mean, the possibilities are endless. We're already doing it. So let me give an example from a customer. So I think, given our scale, like 48 lakh customers, and hopefully, going more from here, customer service is one of the areas that we find very promising because a lot of times what happens is that customers have myriad of issues when they are trading, etc., and you need people on call to be able to explain many things. So now I think what Gop mentioned about the human layer. So AI comes in and tries to solve problems at the lowest level right now. So it is not completely autonomous. So it can come and you can answer simple queries and so on and so forth about somebody's trades or what happened X, Y, and Z. But there is always a human layer on top of that to curate it or to navigate it so that the right answers are going, or if there is some sort of intervention required, that's done. I think the other promising aspect of it is what we call internally facing, but finally it is for the consumer, right? Which is how do you code? How do you develop your product? How do you develop your design? How do you improve your UX? And all of these things we're already using, like vibe coding in tech, to be able to code faster and deploy the features faster, right? But again, it is not completely autonomous. We are not at that stage. So there is always this digital intervention on top of it, and then there is a human intervention on top of it. Design. I mean, we are using. I mean, there are multiple tools that are being using in which AI can help us design better. Product. Again, a very, very promising area where we're using AI extensively. I think in the next couple of years, some of these things will become autonomous, which I mean that AI is actually doing things autonomously, and at that point in time, you will have to have a full guardrail around the whole ecosystem to say what is right, what is wrong, governance around it, and so on and so forth. But yeah, I mean, we're already seeing productivity gains across all of these areas. One other area is like looking at from a risk and compliance perspective, right? Looking at a myriad of trades that our customers are doing. If there is something fishy, something going wrong, etc. So that's a huge thing, especially when as the markets explode with like things like algo and more volumes coming in, you would need actually it will be beyond human intervention. You actually need these autonomous bots to be able to do things 24/7 in markets to figure out what is the right thing to do.
That makes a lot of sense. And I think my last bit on this is that if the opportunity is so massive, certainly the opportunity to grow as a firm also is massive. But it's now easier because of AI chatbots for retail investors to also stock pick because it's at their disposal on their screens, on their laptops and phones. How does that impact, let's say you in particular, 5paisa as a broking firm, whether they become independent, whether they need a platform, how does that impact?
I mean, yeah, so fortunately for AI cannot give recommendations, they can recommendation, but it has to come from an RA. So whether we tie up with a third party, whether tie up with a research house to provide recommendation, has to be signed off by an RA, which has to be a human being. So it is not in the myriad. Even though there are recommendations that might be generated by AI, they have to be curated and blessed by a human being who's a certified research analyst by SEBI to be able to do that. So that is to protect investors and safely. But going forward, obviously there are already models which are providing that input. It's only that they're being reviewed by a human being. But there are enough examples of AI actually generating recommendations. I mean, a lot of high frequency trading is actually still happens based on AI. So yeah.
Do you see the impact with mutual funds, people taking different calls, reports, research is becoming very easily available, or is it still institutional level access only?
No, today it is getting much more retailized, I call it much more for individual investors to invest, but it will take time in terms of really getting recommendations. But because most platforms are trying to build it, we also are building on our own digital platforms, we are also trying to give an APIs around it. My view is that in terms of buying a mutual fund through an AI, my only question to my investors is that you also need to do a human layer. I think it's too early to decide that AIs will decide everything, because there's a way to manipulate an AI, let me tell you that.
It is.
Okay, there is a huge amount of, it's very easy to manipulate. For example, if you have an open platforms, I don't want to comment that as long as you train that, you'll give an outcome which is biased. For example, you are talking about one scheme and say that this scheme, I want to invest in a small cap top rated scheme. Okay, if you give that, interesting, sometimes you may not get top rated ones because somebody has trained them.
Yes.
So very interesting to look at is that what tools are using it, how we are trained, and you will get the outcome. So my belief is that at the moment of time, go back to a reputed platform for you to make a decision in terms of which mutual fund to invest, or go to a AMC platforms which you are comfortable. Because large institutions like us, we are part of the Axis Bank, we are the subsidiary of the bank, so it can give some confidence for you to think about the right asset managers to invest money, then you have to decide. So don't rely on AI. I don't think the age has come to decide that AIs will decide your future.
Interesting. Well, this has been very, very interesting. Thank you so much for making the time to do this and sharing your perspectives so candidly. Such a rich conversation this has been.
Thank you, Hardik.
Thank you,
Thank you,
Hardik.
Gaurav.
Thank you, Gop.
Well, with that being said, if you've had even one takeaway from this conversation, make sure you share it with a friend, family, colleague. They would love to know more and certainly find value in it. And please do make sure you share, subscribe to the episode and the channel as well. We'll see you on the next one. So stay curious, stay patient, and stay invested.